All right, everyone, welcome back. Today, we are analyzing a structural shift in the public Bitcoin landscape. Over the last few days, Cantor Equity Partners, ticker CEP, held a shareholder vote on its business combination with 21 Capital. That vote passed. The deal is cleared to close. And on December 9th, a brand new multi-billion-dollar Bitcoin treasury company is expected to start trading on the New York Stock Exchange under the ticker XXI. This is not a miner. It's not a legacy software company. It is a purpose-built Bitcoin equity. In this video, we're going to break down three key pieces of the story. Who the power trio behind Jack Mallers are, what makes 21's hybrid business model different from anything else in the space, and where XXI might sit on the map of public Bitcoin treasuries alongside strategy and the ETFs. Like and subscribe, and remember, this is not financial advice. All right, let's get into it. What you're watching is the birth of a new major Bitcoin treasury entity. CEP is about to disappear, and XXI is about to ring the bell with a massive treasury already attached. The company is set to launch with an anticipated 43,500 Bitcoin in its treasury. At current prices, that's roughly $4 billion worth of Bitcoin, instantly making them the third largest public Bitcoin holder on Earth. This is not a small debut. This is a structural arrival. The unique syndicate behind 21 is one of the most interesting parts of the story. At the front of all of this is Jack Mallers, someone who carries real weight inside the Bitcoin ecosystem, not because of seniority, but because of credibility, because of the work he's actually done, because he speaks about Bitcoin as a mission, not a marketing exercise, and because he's built real infrastructure through Strike and helped onboard real people into the Bitcoin economy. Mallers is extremely likable, extremely authentic, and extremely aligned with Bitcoin's cultural foundations. And the fact that he is choosing to build a Bitcoin-native public company is part of why this launch feels significant. Behind him, you have the power trio that provides the structural integrity: Tether, SoftBank, and Cantor Fitzgerald. Tether, the stablecoin issuer, is the majority owner in 21, supplying a large portion of the initial Bitcoin treasury, crypto-native capital in its purest form. SoftBank is a major Japanese technology investor, a significant minority owner, adding global scale and traditional finance gravity. And Cantor Fitzgerald provided the SPAC wrapper, the distribution network, and the bridge to the New York Stock Exchange. This is a very intentional design. It blends Bitcoin culture, crypto-native liquidity, and traditional finance scale into one structure. It signals that this company is not a small experimental filing. It is a coordinated, well-capitalized entrance into public markets. Now, Jack has been clear about what they're trying to build. 21 is designed as a hybrid model that brings together the best parts of two very different frameworks. On one side, you have the Coinbase model, a Bitcoin-adjacent operating business that generates high-margin recurring cash flow from payments, infrastructure, and financial products. On the other side, you have the strategy model, an aggressively Bitcoin-denominated balance sheet built to accumulate Bitcoin at scale. The mission is simple: take the operating cash flow, combine it with capital-efficient external financing, and convert that into more Bitcoin. Repeat: scale, compound. And Jack has openly talked about the scale of the ambition here. In a past interview, he said that if 21 and Tether can build this vehicle the way they intend, their goal is to eventually control up to 5% of the entire Bitcoin network. To put that into perspective, that would require accumulating around 800,000 Bitcoin, an extraordinary target that gives you a sense of the direction they're pointing the ship, even if it takes many years or market cycles to get anywhere near it. They are not hiding the ambition. In their filings, they describe themselves directly as a Bitcoin-native operating company focused on capital-efficient Bitcoin accumulation, and the transparency element is notable. They have committed to publishing on-chain proof of reserves, meaning shareholders can track exactly how much Bitcoin sits behind the equity in real time. XXI creates a new category that forces us to redraw the current map of Bitcoin exposure vehicles. They are not an ETF. This is an operating company, not a passive wrapper. They are not a miner. They are not dependent on block rewards, and they are not a traditional enterprise business that integrated Bitcoin into an existing model. 21 was built around Bitcoin from day one, which simply places it in its own category. They are telling markets openly, we exist because Bitcoin exists. Our job is to be an operating business whose treasury strategy is to be a top global holder. This is a pure Bitcoin native corporate design, and it arrives at a time when Bitcoin itself is increasingly migrating onto major equity indices through ETFs and treasury companies. Let's come back to CEP, because its price action mirrors the entire Bitcoin treasury sector in miniature. Year to date, CEP had a wild run. It sat at $10 when it was just another SPAC. Then when 21 was announced, it exploded towards the $50 range as traders tried to front-run the combination. But the long bleed lower wasn't just SPAC mechanics. It happened across the entire Bitcoin treasury sector. Everything with high beta Bitcoin exposure got repriced. These equities don't move like spot Bitcoin. They move like an amplified version of it. They can outperform dramatically on the way up, but also underperform aggressively in any risk-off window. The recent bounce in CEP over the last week is simply the market repricing the certainty that the deal is closing. It is a reminder that price action in this sector is not just a reflection of Bitcoin. It is a reflection of how the market values Bitcoin treasuries and the business models built around them. Here are the structural opportunities as this company comes to market, immediate scale, entering as the third largest public Bitcoin holder on day one. A diverse funding base with Tether, SoftBank, and Cantor providing access to global capital sources most Bitcoin companies simply don't have. And a commitment to Bitcoin-native transparency, where proof of reserves could set a new standard for how public treasuries report their holdings. But alongside the opportunities, there are real questions that will shape how 21 develops in the public markets. How will the SPAC overhang settle? This includes the convertible notes, the PIPE investors, and the early sellers that come with any de-SPAC transition. The convertible notes they issued are the primary source of future equity conversion and potential dilution. How will governance evolve, especially with Tether as the majority owner, and what does incentive alignment look like over time? And the big one, can they execute? Can a company run a high-margin operating business while simultaneously managing and scaling a multi-billion-dollar Bitcoin treasury? So where does this leave XXI? For me, this is one of the most interesting Bitcoin equities to hit public markets since Strategy truly leaned into its treasury model. And the reason is simple. We finally get to see whether public markets prefer a Bitcoin company with cash flow or a Bitcoin company with leverage, or both. Strategy's model has shown what aggressive, debt-driven accumulation can do. The miners have shown how operational exposure behaves. The ETFs have shown the demand for clean, passive exposure. But XXI is something else, a cash-flowing business, combined with an aggressive Bitcoin treasury led by a founder who understands Bitcoin at a cultural, technical, and ideological level. Jack Mallers brings something different to this space. A founder whose credibility comes from years of building in Bitcoin and speaking the language of the community. And now we get to see what happens when someone like that steps onto the world's biggest equity stage. Here are the things I'll be watching as this story unfolds. How the first few quarters of disclosures look, how the operating business actually contributes to treasury growth, and how public markets choose to value this new hybrid model relative to Bitcoin itself, to Strategy, and to the ETFs. If they deliver on transparency, execution, and capital discipline, XXI could very quickly become one of the most prominent names and potentially one of the defining models in the entire Bitcoin treasury space. So I'll throw it back to you. Where do you expect XXI to land on the Bitcoin treasury map? Is this the beginning of the first true Bitcoin native conglomerate that the sector is calling for? Drop your thoughts in the comments, like and subscribe on your way out, and as always, I'll see you in the next one.